Let's get a look at commodities now, and the rally in equities stopping gold's climb though. Here's a look at the yellow metal. Found a breakthrough the 1400 point after the ECB extended a liquidity lifeline for banks, and US data showed the world's #1 economy is turning the corner. So this is how gold is faring. 1386 on the charts. That's a gain of just 0.1%. So is gold's summer surge over? Let's get to Jonathan Barratt, who is Managing Director at Commodity Broking Services in our Sydney studios with us today. Jono, do you think gold is just stopped out right now because we've now got a little bit of risk appetite back?
Yeah, Karen, look, I think it's going to slow down. The risk appetite or the purchases of gold, I think, will slow down, given that we're getting some relief as to where Europe is actually going to head. It's interesting to see exactly that people are starting to feel a little bit more comfortable with the debt problem in Europe, and as a result of that, people may move away from gold. But the gold story, I still believe, is not over.
Does that hold true for the other precious metals as well, Jono?
Look, I think it does. I think, like with any bull market, we need to see a little bit of a correction. When you look at silver, we're seeing a lot of volatility. If, in fact, we see another correction in gold, we feel at the moment that's still just a good opportunity to get back on. When you look at palladium and platinum, the whites will always move with economic recovery as well. So some of those metals, actually, in my mind, actually present perhaps a little bit more of an opportunity to get into if you think gold is too high.
Hey Jonathan, good morning, it's Adam. What are some of the other driving factors that could push gold higher? Because aside from the investment case that you and I could probably make for gold, given that inflation could be one of the reasons why investors get into it, what about the real demand and supply dynamics? I mean, China is a massive consumer of the stuff, and the forecast is saying that they're looking at about 600 tons in 2011. That's up 20% from this year alone. Could that just support the price well beyond into 2011 to push higher?
Yes, Adam, I think it will. One of the things which we're noticing, particularly out of China, is they can gain access a lot easier to gold, which in the past it was always a bit of a concern. One of the things which we did find out also was that the mutual funds in China have just been given a green light to invest in gold ETFs. Now, this only happened this week, so all of a sudden those mutual fund holders in China can have that exposure to gold via ETFs. And in the past we've seen good demand from this sector, and it's been one of the big growth sectors, so I think this will continue, particularly when we've just listed one of the first gold ETFs in Hong Kong. So I think this or China will certainly support prices, particularly when we feel we're going to see a lot of inflation coming out of China over the next couple of quarters.
Well, not just China, but Karen as well might be supporting the prices.
Well, it is coming up to Christmas, guys. We've been talking about this inflation story all week, so I want to come back to a story that kind of caught my interest, which was that a BHP Billiton plans to increase the price of coking coal for Japanese steelmakers by about 8% from the current quarter for the January to March period. In context of what we've been talking about, Jono, do you think an 8% increase is fairly high, or is it kind of just a medium increase given prices are already fairly lofty?
Karen, look, it's just a tradition. You've got to actually put the benchmark in place for your negotiation. In my mind, when we see negotiations of this style, BHP will actually sort of put the price that they're comfortable with, or the increase that they're comfortable with, but at the end of the day they're going to have to settle with something a lot less. So I feel it's the starting point of any negotiation, but given that this inflation story is certainly in the markets, and the slowdown in China is certainly there, and we have overcapacity, I think BHP won't get the price that they actually want. In fact, they're going to have to settle for a lot less, because we do see that slowdown happening in China, and I think that will affect the demand and will affect, as a result of that, the prices for commodities which we sell.
Yeah, deliberate effects by China to slow the economy. How do you think China would have been interpreting this 8% that BHP Billiton is seeking?
Look, I think they'd just look at it as they would with any of the negotiations which we've seen, with iron ore or anything like that. They'd say, OK, well, that is a bit of an issue. It is a concern, but look, I think we just come to the table, we come up with a price that's agreeable to both, and I think that's the way the market would actually operate. Remember, China is a big market, Japan's a big market, so they'll put that bids in and they'll come up with an even ground, which both people will be happy with.
John, let's move on to some other commodities and talk a little bit about oil. We saw, oil's trading at pretty much the highest levels that we've seen for this year so far. Where do you see this ending out at the end of 2010 and into 2011? Are we going to hit the $100 mark anytime soon?
Look, Adam, I think it's quite interesting because we've seen data, the inventory data has seen specific builds and quite sizable builds as well. But I think the investor is now focused on the weather. Obviously, when we see concerns what's happening in Europe, a lot of cold weather happening there, so naturally people will flow to oil just because there'll be more demand. The key, I think, with oil trying to reach 100 will be with the weather, because it's not on the fundamental side. The fundamental side, we're still awash with it and we're still seeing builds. So I think it's more of a knee-jerk reaction for oil to trade higher. And if it gets to 100, let's see if it breaks through this $88, $89 mark. If it does, the next level will be 95. But I think it'll go up there on the back of the weather and nothing else.
Yeah, there's been a lot of that white stuff around in Europe, hasn't there?
And you know what that means? High air fuel charges as well. And we saw Singapore Airlines raising those yesterday, so they're going to go up again. But buy those tickets soon.
Opportunistic pre-Christmas, isn't it?
Exactly.
Jonathan Barratt, thanks for joining us.